kind of a mundane Monday here for the markets, at least for the grain markets anyway. But overall, all of the markets trading very, very quietly here as we get closer and closer to the Christmas time when those markets will be closed on Monday for Christmas Day, but a light trade volume. Let's check out what happened last night with the export sales numbers. And we did sell corn and soybeans. First of all, the one sale of soybeans, 132,000 metric ton, went to unknown destinations. 110,000 metric ton went to Mexico, and that was of corn. With us right now is Jim McCormick. He is with Allendale Incorporated in McHenry, Illinois. Jim, these markets just continue to be very, very quiet. So it bodes the question, you know, with that report that's out tomorrow, could, with this quiet and with this very thin volume of trade, really swing a market one way or the other?
It could. I mean, you said it best. The market is very, very quiet. We're racing into that holiday type of mode where a lot of traders just kind of shut down and just want to get through the holidays tomorrow, which the lighter volume does mean if we would happen to get a surprise one way or another, you could get an unexpected move. Hopefully we get a little bit of bullish surprise. And the corn, that surprise may come on the ethanol front. We're consuming a whole lot of corn and ethanol. We're record pace, actually, and that begets us a decent shot the government's going to raise the ethanol demand tomorrow, maybe give us a little bit of a bullish surprise, and, you know, that could, with the funds still short a lot of corn, that maybe give us a surprise run.
Would it take much of a bounce or much of a lift in that number to be able to really get some kind of reaction from the market?
Well, I think, yes, it could. I mean, it's not going to put a limit up or anything like that, but maybe a 5 or 10 cent correction back up maybe to last week's highs could happen really quick on a friendly number. But the fact of the matter is farmers, I think, will be there to meet any really good rallies near last week's highs at this point, because some farmers out there are really needing to move grain as a way to generate income at the end of the year.
That was my question. How motivated are a lot of producers at this point? Because some of the producers that we've heard from just basically say the bin door is locked and I'm not interested in doing much of anything until probably late January, early February.
Well, most producers are. The ones who would sell are more of a way they need to generate some revenue. Right now, the balance sheets are very, very tight at this point for the farmer right now due to the depressed prices the last couple of years. And there may be some guys that have some bills due at the end of the year, Christmas bills, and instead of trying to extend that line of credit a little bit more, they may just say, hey, we get a run up, get a bumps in the basis, go ahead and let a few bushels go. But most farmers are, well, the grain's locked in, like you said, and they're hoping to wait out for a spring-summer rally.
Is the South American weather being taken into consideration today?
It is a little bit. I mean, the fact of the matter is they're a little bit dry right now, but there is rain in the longer-term forecast. And what I think the nut of it is the dry areas are shrinking, not expanding in parts of Argentina, and that's taking a little bit of the weather premium out of the market that was put in just a week ago, unfortunately.
All right. Jim McCormick here with us. Jim, when we come back, I want to get to the livestock numbers, but first let's check out what's going on with the grain numbers here. And we'll start with this corn market. That nearby contract of December is down 3.5 right now at 336.5. March corn is down 4.5 at 348.25. January soybeans down 7.25 at 982.5. March beans down 7.5 at 994. December Chicago wheat is unchanged, but July new crop wheat 439. That is down 6 3/4 and the low of the contract. July Kansas City wheat also trading at the low, 440.5. That's down 6.5 cents. And July Minneapolis wheat down 2 1/4 at 621 3/4. With March cotton down 56 at 73.16. Don't go anywhere. We'll be back with more Market Day Report right after this. Jim McCormick with Allendale Incorporated is here with us from McHenry, Illinois. Jim, this livestock trade, it just also kind of gets the feel that it's much like the grain trade, much like everything, all the other commodities, just very, very quiet right now.
It is very, very quiet. We are seeing a little bit of pressure pretty much on both the live cattle and the hogs. I think some of that is a little bit of technical weakness. You've taken out some critical technical support levels on the moving averages, and that's just encouraging the funds to liquidate. They've been long a lot of these livestock for a long time. They've got a lot of profits in them, and I think you're just seeing some end-of-the-year profit-taking kick in and a very slow volume-type trade day.
Is there still a lot of longs, though, in this market? Still a ways to go?
There is quite a bit of length in the market. So if they want to get out, they could continue to get out. I don't think they'll completely flush out. I think it's a little bit more like, hey, I've got the profits. I might get taxed on it. I'm going to book some of them. But, the fact of the matter is, the stock market continues to rally. Consumer confidence is, at 17, 18-year highs. So that bodes well for the livestock. In the long run, beef, a lot of people will be getting to January here. A lot of people say they like to go out and get that steak. They're tired of eating pork. They're tired of eating that ham and that turkey, and they're looking for that steak. So hopefully we get some demand once we flip the calendar into 2018.
I kind of fell into that camp a little bit over the weekend. Well, the product market still continues to, I guess probably the correct term here is hold its own.
It's holding in there a little bit. I think what you're probably seeing is a little bit of retailer pricing at the end, trying to fill in. Remember, just a couple weeks away from the major holidays, and you got some retailers that are trying to get some last-minute bargains, trying to and maybe try to do a little loss leaders to get some consumers into the grocery store and stock up for the holidays.
All right. What about the hog complex? Is this a market that is basically in the same condition as the beef market, just a little bit behind schedule?
I think that's exactly what it is right now. Technically, we tried today to rally, failed at the 20 and 50-day moving averages, 20 and 50-day moving averages, failed at it. Now we're just kind of seeing another round of profit taking. I think they could slide down a little bit lower. Your 100-day moving average on the Feb hogs is 68.89. Your 200 days at 66.43, and it looks like they may want to test that before we really reverse them.
Let's go through the numbers real quick here, Jim, while I got you on the phone. Live cattle market right now, the February down 2 at 118.28. April fats are down 38 at 119.82. March feeder cattle up 26 at 143.58. April up 7 at 143.72. And February hogs down 135 at 67.50. April hogs down 82 at 72.30. The crude oil market, however, and we look at this because it also a commodity. January crude up 51 cents at 57.87. So what attraction does this crude oil market have for the fund managers today?
Well, right now, I think they're looking at the weaker dollar. The other thing going on is there's no doubt about it. We've made some policy changes in the Middle East, so you might even get a little bit of risk premium going into what could happen in the Middle East long run. But the big thing today, I think, is just the cheaper dollar. When the dollar goes down, crude oil tends to go up, and that's what we're seeing today. And
is there any support under where we're at on this dollar right now?
Right now on the dollar, there's a little bit of support. I think like your 100-day moving average on the dollar is right around this 93.16 level. So a little bit of a pullback is in out of the realm of probability. The dollar, I think, more than anything, is just trading sideways, waiting to see if they raise interest rates this week, as everyone anticipates.
All right. Jim McCormick here with us. And right now, that dollar down 110 points, Janet. And so we're watching that very, very closely, trading at 93.77.
All right. Thanks for the update. Appreciate it.